Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. Let's see how at least the backhoe is gone, and they didn't knock anything down this morning. Hooray for us! Crazy, crazy, crazy. All right, let's check out the sound. See how that sound is going. And the answer to that is a little bit more. I just have to get rid of the commercial, and once the commercial's gone, A-OK. And there, the commercial's gone. Yep, there we go. Sound is good. We're 5 by 5, as they would say. Excellent. All right, now, back to the dollar index again. You know, that dream, that promise of, rates being cut are just orbiting, and it doesn't seem to want to stop. It's just there. It's just over and over and over again. The opinion is that the interest rates are going to drop. They're going to cut. The whole bit. They've had it, basically locked in their minds that this is the end. And so, at the same time, I've seen quotes from other brokerage houses, throughout, not always singing the same tune, which is really fascinating in its own right. The fact that they don't, in other words, it's not unison. Some are looking for an S&P 500 to fall down. We saw a nice strong GDP. When you take it apart, most of the GDP, if not all of it, was because of government spending, and that's why I guess the Federal Reserve in Richmond is pointing and saying, January and February are going to be problems. So the fourth quarter, we'll see how the fourth quarter comes out. That's only the third quarter. See what kind of drop occurs if it goes from 5.2 down to, 3 or something like that. And then, we'll see how January and February are of next year. They're talking 1%. And so back to the Obama years again. But then Obama never had the opportunity to spend this much money. Mr. Biden has spent over $6 trillion, $2 trillion a year over the budget itself. $6 trillion increase in 3 years. And so that is the explosion that we're dealing with, and that's why we see what we see. And so everybody is looking for. A lot of people, a lot of money managers missed the market. There was an article, I guess it was yesterday, the day before, how they got it wrong, and a lot of money managers generated 3%, 4%, and the year over year is something like 12, 13% in, I guess it's in the NASDAQ, or maybe it's even higher, and the Dow Jones is something like 9%, and the S&P 500 is like 6%, or I think it's reversed that way. But I mean, and I guess if we go and look at the numbers themselves year over year, let me just do that. That would has my curiosity. Year over year. Let's see what they have for year over year, because that will show the GDP situation that's going on, and that's really wild. Let's jump over to the other chart. Let's go and see instead on the beta. Let's go to the. There it is right there. Let's check out the dollar index there. And then you can see the dollar index just like on J4X. That's probably where we went down yesterday. Okay, so we were on ZAR doing that second half of the webinar side already. Let's see, where's the dollar index? Right there. And you can see a little green here today. You can see over here on the chart, you can see it lifting up. Actually, it's through the zero line even. It's trying to lift up a little bit. Did we get down to the 102s that we thought it would get to? Yes, we got down to 102.38. Maybe now Mountain West will get his bounce. He was just a couple days early, that's all. And so that's where we are. Because on this day, Mountain West thought there was a top. And then we got a little weakness out of it that day right there. And then there. And now we're starting to really lift back up. So Mountain West is finally getting its top. I thought we'd see the 102s. Hey, Robin. Yeah, good morning to you. Let me go to my tea. Nothing better than hot tea on a cold day. So yeah, there's the bounce. We're starting to get that now. You see our math is turning up. Still in that weekly sell. You can see that right there. And you can see just a little teeny little bounce there. And let's see what the weekly looks like on J4X. Right there. Still pressing down, but the fast is at 8.3. The slow is at 13 still dominating. And then I know what I'm doing. I wanted to go take a look at year over year on the stock market. Because it shows, Dow 30. Return for the year. There we are. And 16.8. It's a year to date. Stocks return 16.8, bonds 2.3, and a 60-40 portfolio of 9.9. All right. Yeah. So if the overall return is 16.8, then the S&Ps are probably like 20, and the Nasdaq is probably close to like 26, something like that, 26% return. And those money managers have had problems. You know, they're having returns of 3 and 4%. So they've been underinvested. We've talked about it here. We keep on thinking that the stock markets want to lift up because of that. You know, there's a lot of pressure on them to go up because they're underinvested, and they need to have that in their portfolio by the end of the year. And that's usually the way they work, too. It's a weird way. And that's what they call window dressing. When people wonder what they mean by window dressing, that's what it is. They try to show that they have all the stocks that did really well this year. The problem is they didn't own them all year long, but they own some of them all year long, but they were underinvested. So what's that underinvested mean? It means that, let's use round numbers. So let's say you were a fund and you were managing $1 billion. And so that meant that you were supposed to be invested, say, $750 million out of the $1 billion, in other words, 3/4 of it, invested in your portfolio. But they were so nervous coming into the year, and then it roared, and they thought, okay, it's not going to last. And so they were underinvested. And so they weren't long $750 million of the stocks. They were only long, say, $500 million or $450 million. So they were like 50% or 40% of the market. And so they were missing basically a good third. And so because of that, and they may have been not exactly in what they referred to as the Magnificent Seven in the beginning, because they were afraid of the techs, because interest rates were high, and when interest rates are high, tech companies usually do very poorly. And so combine that together, they were underinvested. All right, but they were still invested, just not as much as they're supposed to be. And that's the key concept of being underinvested. You're supposed to invest $1 billion or 50 billion and whatever, and you only invested of that, say 40%, not 75%. And you're supposed to be invested and they always talk about the 60-40 combination. Another 60%, you're invested 60% in stocks and 40% in bonds. And so some are pure stock funds, and they call themselves stock pickers. And that means that they're supposed to be invested like 75-80% in stocks. And maybe they keep 20% in bonds, but it's only short-term bonds, so that it's collecting some interest and there's, some opportunities. When they see one of the stocks they want to buy, they sell some of the little bonds or T-bills, and they plow that money into the stocks. So that's where we're at. And yo. And so that's why the market is the way it is right now. We're looking at, the money managers in general. I saw the average money manager was up a little under 4% for the year. And obviously looking at stock market overall being up as much as 26% in the Nasdaq, 20% in the S&P, and almost 17% in the Dow Jones Industrial Average, makes them underinvested. So and that's a real. So they're not necessarily that good in stock picking, and we see that historically, that the money managers are just not performing the way they should perform. And that's been going on for a while, and there's no changing it. It just is what it is. That's where that dartboard thing got going a long time ago. But anyway, that's where we stand at this point, and that's why the dollar index is, let's see, what's this? Okay, just got a text and something. I wanted to see what that was. Yeah, so that's why when you look at the, what is that? Okay, cool. And so that's why when we look at it like that, that's why it is what it is, and there's no changing that. All right, so from the dollar index we go over to, and let's go to the daily too. Let's go take a look at the euro. The euro, I can see the euro has been pressing down a little bit more again. It's losing a little of its push, but it's still in that weekly buy. So it's not like you have that they have to be deeply concerned. There is a lot of talk in Europe that they need to step it up, start making some good changes to grow. I don't know what to say about that. Maybe they're all going to go like the way Slovakia and Hungary and Poland have, towards capitalism. We'll see. I know there's something going on up in Helsinki about AI these last 24, 48 hours. I have a hard time taking them too serious. They're too lazy. You can see here the fast on the daily is trading at 60.313. The slow, 74.9. So the pressure is on the J4X. You can see that. You see it over here. Let's see. Right there. See the same situation. It's trying to move down. But you can see here, the weekly right here. Right there. The weekly is still holding up. Holding up very strong, actually. And the fast, which was in a buy back in here on the weekly, which is even more interesting. Let's move that up a little bit. There's the zero line. You can see it's went into the buy down in the 106 area, and it made it to the 110 in it. That's pretty good. And it doesn't seem to want to let go. So I'm not that concerned about this little selling, because if anything, it's end of the year. Today's the last day of November. They need to size up. I say this all the time. Maybe I need to describe it better. Sizing up means flatten out their books. They need to size up. That's what we call it. In other words, sizing out or sizing up means zero on the left side of the balance sheet and zero on the right side of the balance sheet, so they can start a fresh year. So they try to size up or flatten out, or however you want to describe it, and that puts pressure on the markets. And sometimes they need capital to do that. So they have to borrow it, and that goes onto the balance sheet of a fund, and it's just all accounting type stuff. In other words, this time of the year, most of the action starts to come from accounting. That's where it comes from. They say if they're underinvested, they need to add more. If they're overinvested, they need to flatten out. Put the cash back where it belonged. Most of them really wish, I'm sure, that they were overinvested in all the good stuff. Sipping my tea again. Yeah, so that is what really happens this time of the year. It's literally the accounting side of investments. So now, from there, let's go over to the cable, which doesn't seem to be as sensitive to it, as you can see. You can see there. Let's move this over to here. Go like that. I got something in my way there. There we are. And you can see here, you see that strength right there where it's still above the zero line, holding up really well. The weekly, same situation. But in one way, notice the fast didn't get going as fast as the euro did. Let's just go back to the euro for a second. The euro started off, where was it? The fast got going in, what was that week? That was the 20th, October 20th. Now let's go back to the cable and look at October 20th with the fast. And that is right, where's that at? Right there. Okay, so it didn't get through. It got very close again, and then when it took off, it really started to put that push on. Let's see, move that line down to, there's the zero line. And so, boy, when they joined in, look at that. The two of them joined in together. It was an explosion. It was in a daily buy. It had you getting into the weekly buy, and here, it was really strong. And literally, day or two later, it exploded from the 122 up into the 124s. And then it did it again. Went into a sell a little bit in here for a bit, but you were still in the weekly. And sure enough, it did it again. It jammed into the buy, and then it just kept on climbing, and we're still there. We've been in a buy since this big push. It tried to weaken, but it didn't do too good a job with a green and a red there. So that really, sticks out very clearly that the cable is not having the same issue as the euro. Now, see, the euro is like the second world reserve currency. And so it gets a lot of pressure from the outside, just like we get a lot of pressure in the United States from the outside of the United States, because people are using our dollars. They're using them. Matter of fact, I think Argentina just, with the new election and the new president, declared that he's shutting down their central bank altogether and just going to the dollar. Now, there's some punishment to that usually, because if there's inflation in the United States, it's reflected in the currency. And so when you peg your currency to the dollar, you end up benefiting from it and being punished by it. So it makes it a little bit tougher. But the euro, people, because of this mad campaign to pretend that China is the second largest economy in the world, and it's not. And we've shown you over and over, the European Union has like a $21 trillion economy. The Commonwealth is greater. China is not as big as Japan even, which is really odd. That's the fourth largest economy in the world. And so it's all got to do with the currency, because they have their currency fixed to the dollar now at 7 point something, and they move it up very small increments. So in other words, even with it fixed against the dollar, they don't go 7 to 8 and 8 to 9. They go from 7 to 7.1 to 7.2 to 7.3. In other words, they keep it very tight, and that keeps the pretend alive. But we know that when we see, and this again is the example of the European Union being the second world reserve currency, that when something's in default by the European Union, they find money to pay for it. But when something is in default in China, they can't even find 10 or 15 or 20 or 30 or 40 million dollars when they have taken in 9, 10 or 11 billion dollars in that sector. So where did the money go? What are they doing with it? How do they allow this thing to default? The whole bit. It's just an example of it all. All right. From there, let's see, we were supposed to be back on the cable. Let's go from the cable, which is right there. You see all that strength. Let's go to the Swiss. And there it is right there. Just constantly moving, just, and as far as I'm concerned, in a very positive. Oh, look at that. So the fast is at 18 and the slow is at 14. So it's getting ready to turn. Now let's take a look at it right here. Okay, yeah, I see a little bump there. It's not that big, though. Look how far down our algorithms are. So I don't know how long this will last, but I kind of doubt that it'll have a lot of meaning. But again, we're at that accounting side of it. The Swiss National Bank is, may be doing swaps before we know it. We usually spot them about a week after it's happened. Sometimes 2 weeks after it's happened. Maybe the European Union will. We've seen the Exchequer in England do swaps with the United States to flatten out their books for the end of the year. So, boy, after that first taste of the tea, I just keep on wanting more. All right. So, let's go over to the yen. Where is the yen? There is the yen right there. Pressure on it. Let's see if we can get the internals going. There it is. The fast is at 17.5. Wow, that thing's flashing around, isn't it? 17.5, and the slow is at 31. So it's still in the down mode. That's nice. I'd like to see the Japanese benefit a little bit that way. Let's put it up over here. There it is right there. It is popping up a little bit here. We're seeing some strength. You can see our green. Let's use the right mouse here. You can see the green line is trying to turn up. But the weekly went into a sell last week up in here, and finally, it's giving some relief. We figured that maybe let's take a look at that again. We were thinking possibly like the 144 area, something like that. Maybe 145, 144.75, something like that. Maybe it'll play it down to that. Maybe we won't really see for a while what is exactly going on with the yen against the dollar, just solely because of all the I want to use the word turmoil that's been going on over there. Change of Bank of Japan head for the year, and the finance minister had to resign. They have a lot of noise going on here. But maybe now that the finance minister resigned and the new maybe it was slowing down the Bank of Japan new head. Maybe that's what it was, because ever since he resigned, which was up in here, up in the 151 area again, it's found a way to get back down to 147. So that says a lot. Yeah. Yeah. So yeah, that's pretty much what it comes down to at this point. And from there, we go to the Great Experiment. Let's see what the Great Experiment is up to this morning. There you are. Oh, look at that. Nice move on that on the downside too. Playing with the daily sell right there. The weekly doesn't look like it's going to have many issues. You can see the fast and the slow above the manifold on the plus side. So right there. There's the fast, there's the slow, and there's the manifold. So it's well beyond the zero line. It's going to take a lot of work. Maybe they're going to front run it. Wouldn't it be funny if they came out and added like 12.5% more interest on their currency? I mean, they've moved from 12.5 to 25. Maybe they're going to go. Maybe it'll cut it in half, like 31. Go to 31% to try to slow this thing down. It got up close to where we were expecting. That little spike there is 32.23 basically. We were looking for more to like the 33 area, but this is pretty good. We started talking about that back in here with the daily buy around the 29 or 28. As a matter of fact, it was even worse. I think, let's just check it out. I think we've been talking about the 33 area since the green line, which is like the 29.5. So, we got close. But, we don't know what they're going to try to do to keep the thing happy. It's a real quagmire, let's put it that way. They have a lot of issues. They don't have a lot of, the currency, the inflation. Your currency goes from 1 to basically 32 in 10 years. It is truly an experiment going on, not a solid economic policy, that's for sure. That's a flat-out experiment. I don't think anybody would want their currency to double, then triple, then quadruple, in a 10-year period. That really hurts the population. So that's why we call it the Great Experiment. All right, from there, we'll go over to the South African Rand. Right there. Oh, and let's just show you J4X, the great experiment right there. Yeah, see, they're generating the red too. Same situation. The fast is at 68, and the slow is at 84. So the pressure is on. Let's see if they're front running something. You never doubt anything with them, because the currency moves around incredibly vicious action. All right, so from that we go over to the South African Rand. Right there, the world's #1 brick currency, and it's the country is kind of trapped in its own situations. It's not in the easiest positions, but it has gold, and its economy is. You have to give the African National Congress a smile, I guess you could say, and go. You haven't been able to destroy your economy yet, as much as you've tried, and ever since Nelson Mandela, the country is just slowly going into the hole, and all this, I guess what we call it, illegal immigration, has put Mr. Mandela in as the great savior, when in fact the country's economy is not what it used to be. And that's all it is at this point. They call apartheid, it's an immigration issue. It's got nothing to do with race, or the Zulus wouldn't have had a full vote. Obviously. How do some Africans have full votes and some Africans don't have full votes? Well, obviously when you're indigenous of that area, that was your land, and you get a full vote. And when you're an illegal immigrant, you don't. You only get a half a vote. And see what that did for the country. So, but you won't hear that on the mainstream media. They'll just tell you that it was a flat-out racist thing, and that's it. And the world didn't pay attention to the tribes of that area, how they had full rights like everybody else, the whites and everything else. So, all right, let's check out gold as we see, and we got the South African Rand popping up over here again. So that means normally the gold should be moving down. Saw a good article this morning. China has been buying gold hand over fist, just throwing their money at gold. So they try not to buy it. They know that bonds are at the highs, and they don't want to really. That's one thing I give the communists credit, is they realize that prices are way overvalued in the bonds, and to buy bonds is really hard to do. It hurts, But they still keep invested almost $1 trillion in the United States for a country that claims that it wants to take over the world. That would only drive their $1 trillion into the toilet, as we would say around here. Let's get gold up on the screen. There it is right there. And you see gold trying to move down the same way a little bit. Nothing major. It's been in that buy since back in here. And it's been in that weekly buy since the 18 and change back in here, that jumped it up to 19.5 in just a short period of time. So it's been a very nice move. Very nice move. Our beta. Let's go to the beta. I want to show you why we call it a beta, because that weekly sell, the 2 week in a sell, disappeared on one of them. Let's go find it. And I talked to my programmer about that yesterday. They have to go check what's going on, or it may be the data feed where we're drawing it from. And so he's going to, try to set it up so I can see that at the same time. But you can see here we were in a weekly sell a while back in this weakness right in here. Let's put it up on the screen. Right there. And that made it into a sell. The following week was in a sell, but when it came out of it last week, it was in a buy, but we didn't know that until Tuesday. And then it put that into a buy on Tuesday, and then now you can see it on the videos too. This was both these weeks were in sells, but this is not matching the weekly. I'm sorry, the daily. So they're going to have to go in and check the code and find out, or is it just our data feed itself is that bad, where the data didn't come in for a while. tea time. All right. So yeah, that's the beta. Now, we didn't have that problem with silver. So let's put silver up. There you go. You see the silver has been in that weekly buy, not letting go. Same thing over here. Oh, let me do this too. I want to save the gold. Right there. Like that. Like that. Like that. Now there's the silver. Let's put silver up over here. And you can see the silver, same situation, staying in the buy since back in here. Not 10 weeks like the beta, but it's doing a good job at it. In a daily buy since here in the 23s, we've gotten up to 25. And the South African rand, as you can see right here, was moving down. That was giving it its strength. This little pop up was a little surprise, and you can see over here it got a little choppy from it right there, but didn't go down as much. Now when we got the pressure on it again, we saw lifting again in these last 3 or 4 days, just like here. And then when we widen it, you can see that today it's starting to go up again, and you can see it right here. We're doing the same thing, but it's not a big move. And it's that time of the year where people, they buy the metals. They're into the metals. So that's why we're seeing that strength in the metals complex. But, still not changing the situation whatsoever. All right. From there, we'll go to copper. Oh, and I want to save this, too. Let me save this. There we are. Every time I have the metals, I like to try to save them. We have somebody that likes to watch them, and I like to send that over more up to date, and then I'll do it up to date again, but just this way it's cleaned up more. Now you can see copper is trying to be in the sell for the last 2 days. It's feeling that pressure. It's in a weekly buy for 3. It's it's not really acting that poorly. Now over on our beta, it's been climbing. You can see from here back in, what is that? Where is that? That is mid-October. Let's do this too. It's right there. Yeah, since mid-October, it's found a base in the beginning of October and kept on climbing. Now, when we look at it on our beta, HG right there, that weekly has been in a weekly buy all of November, but was in the sell there during this sell-off down in here. And then we went into a weekly buy 4 weeks ago there. And you can see 3 weeks back here. We're still, again, curious. I guess they have a better data feed. You can see the daily buy was on for a while, a couple days in the sell, then back in the buy, now back in the sell again. Whereas let's just show you that again, like so, right there. And you can see, again, that weekly. Copper, again, trying to climb up towards that $4 area, and this is what we always like to call the gold of China. Because they buy a lot of copper. And matter of fact, copper is so important over there that they have found copper bars, not copper. They have found them, they've scratched off the surface and found that they were made of lead. So that's how they what do you call that, when you make something illegal and you're copying it? Counterfeit. They've made counterfeit copper bars even over there. And they found like $500 million worth that were counterfeited in storage. So it is wild that they do that stuff. So that's the copper. And the copper is just kind of like bouncing along, with the South African rand. And let's just go back to the rand on our work here. Right there. There it is. And so you can see the rand has been like, it had a nice slide down, and that's where we saw that strength in the metals, throughout the October move. And then, we started basing and trying to turn up, but we really haven't seen gold. Let's look at the main player there. We really haven't seen gold do much about that, but go up, and that's probably all that Chinese buying that they're talking about. So when it started to get choppy in here with the South African rand running up, then failing and running up again, and then coming down again. Or in this case here, it was failing, running up, and then a win, and then again, and then it again. Notice it's starting to really look like an upwardly trend, which means that maybe going into the new year it could be more negative gold. It's hard to say, but I would. Until we get into a weekly sell, I can't trust it. What made me concerned enormously, as we showed you on the beta, again, we're just going to remind you, we do not hide our inaccuracies. And let's put it up there like that. We had 2 weeks up until last week of sells. It made me very nervous because we were seeing the action on the South African rand. And so I was like, wow, what's coming around the corner? But no, gold has done a nice job staying up. You can see in that daily buy for weeks upon weeks there. So the daily kept us neutral. As bad as the beta treated us, the daily protected us. No one got short. I kept on saying, wait for the weekly sell or a daily sell. Maybe this is the beginning of the sell-off. But instead, the strength has come back into it again. And now there's articles running around out there about China buying a lot of gold. They got to do something with the money. They bring in net over $300 billion a year from the United States, so they got to put it somewhere. Alrighty, so from the South African rand, we go over to the. Oh wait a minute, we didn't look at platinum. Let's check out platinum. Platinum does seem to give us insight to the action. And you can see platinum's been in a daily buy for 3 weeks now, doing the same thing and going from the 9 to 9.5 basically. It's not exploding, and it went from 8.5 to 9.5 overall. It's still not exploding. It's just kind of moseying along. The overall trend is up. The fast is having a lot of issues. It's trying to keep up with the slow, which is really saying a lot. And what that lot means is that it's saying that it's having a hard time running, going up, and obviously so. I mean, gold goes up from 18.5 to 20.5, $200, and we can't even get platinum to go up $100. It's weak, very weak. Same with the silver, as you can see there. Silver is basically going from the $21 to $25. At least that's showing a little bit more power, whereas gold went up like 10%. Platinum, 10% in platinum is 23, I guess it is 24. So definitely the silver gold, which the spread itself has been towards the low end of the range, is trying to change direction, but it's not doing the best of it, and that's really the metals complex in general. All right, from there we go over to the Canadian dollar, the last of the currencies. And if anybody wants to see anything, please, shout it out. Be my guest. We'll go take a look at it. And there's the CAD. Dollar CAD. Nope, that's not it. Right there. There it is. Dollar CAD. You can see dollar CAD, has done that topping out with Japan and the bonds and everything else. It's topped out. And it's gaining against the U.S. dollar, but when we go over to crude oil is losing. I mean, it's trying to pop up a little bit, but it's really not. And today we have, matter of fact, we have a big OPEC Plus meeting, and I don't really think they're going to do much to move the metal, the oil. You can see it did go in a daily buy yesterday. And it did jump about $1.75, but that product is always volatile. It's not that it's not. It always is, and it perpetually is constantly. The volatility in crude oil for decades have been wild. I mean, you got to imagine the poor thing went to $39 minus in the futures contract. $39 minus. So in other words, not trading at $1, not at $2, but minus 39. They were paying people to take the futures contracts. And you can see here on the beta, it's not it's in a weekly sell still. Same thing over here. In a weekly sell, trying to get towards the buy number. It's very close. It's only at minus 0.15. and it's in a daily buy there. And then you can see up on the beta again, you can see that the daily is up. You see it right there. You can see it's trying to lift. It's got a couple green dots. It's got some pressure going on the upside. It's trying. It is trying. And so from there we go over and take a look at Brent. Let's see what Brent is up to this morning. We'll put Brent up on. Where's it at? Let's put it right on the beta right there. There's the Jan contract. You see it's lifting up. We go over here. Instead of having Canadian dollar on there, we'll just put the Brent up there. There it is right there. Brent trading at 83.64. And you see that same thing over here on the beta. 83.64, yep. And you can see the weekly still in the sell. You see the daily here is lifting up. It's at 81, and the slow is at 68. It's the same situation over here. You see the green lines moving up. And then let's put it up on a weekly over there. There we are. You see the fast is at 36, the slow at 25. So pressure is on the upside. It's trying to get going. Matter of fact, it's almost a green hinky as we speak. We've got a little teeny weeny little green hinky. So it's trying to turn into the buy. See here, all we've done is lift it up. You can see our fast has made it through the zero line last week. And this week, this is trying to get in there. And that might be, we'll have to check and see how the feed is, but that could be literally a day behind on the weekly. What we learned with the gold, it could be a day behind. And almost 2 days behind when it comes to the weekly. Now, 9 out of 10 times it's been like we've had like 16 out of 17 charts. It's been fine, but gold, it really reflected a lot of weakness when there wasn't a lot. We saw the weakness, and there was weakness in the price, but it was not death-defying like I thought it could possibly be, which made me a little nervous there. Because I try to give solid information, and when my math is going awry, I'm like, whoa, what's that all about? But it probably was more of a data feed than our algorithm itself. So that's why we're trying to link with Dukascopy to have a better data feed. All right, now from the Brent, we'll take a look at West Texas. Let's see. There it is right there, West Texas. And you can see here it's been moving down. Fastest at 30.7, the slow is at 21. So you're seeing that strength there. And let's put it up on the beta. Crude, right there. There's the crude. And as you can see, like we said, it's trying to move up. And then we have it over here. It's doing the same thing. They're all trying to move up. So, and then the weekly, still minus. Let's see what the weekly. Oh, there's the weekly. It's turning up a little bit. It's red on the hinky, but the fast and slow stochastics are pushing more on the buy side. Then from there we slide over to Nat Gas, NG. See how that's doing. I saw an interesting article this morning on that one. That one really surprised me, was that 20% of the natural gas that Europe buys from Russia is resold outside the country, which it's like what? Doesn't the population, aren't they trying to keep the population warm? I mean, what do you mean you're selling natural gas when you're starved for it? So it really makes you wonder what the European Union, what is in their head that they are willing to do that. But 20% of natural gas that comes into the European Union from Russia is being resold and exported. And it's like, wow, what a strange event that is. There's copper again. Where is the NG on the beta? We'll find it. It's on there. I know we looked at it, and we look at it. See, there it is right there. So there it is right there. You can see on the daily it's been in a sell for a while. The weekly it's been in a sell for a while. And then we slide over to the platform here. Same thing. It's been in a weekly for 4 full weeks. And the daily jumped into buys a few times in a very odd direction, and then back into the sell again. So that top where it went into the sell here. Now let's see what that is. Is that a buy? I think it jumped into a buy for a day. Let's take a look and see. Yeah, it went into a buy for a day. And to identify that, we'd have to, let's go back. So NG, right there again. So 4 days ago, it went into a buy 4 days ago. I guess off of this pop here. And then broke right back into the sell. Yeah, I guess that's how it worked. And so that's the pressure we're seeing on the natural gas. But can you imagine? That's the strangest thing. 20%, I'm going to repeat it like a fourth time. 20% of the natural gas imported from Russia is re-exported out to other countries. In other words, not in Europe. Exported further away. It's like, what is going on with that logic? Could that 20% just drive the market down for them? Is somebody collecting do-re-mi from it? Why would they do that? To me, that makes no sense. I mean, they're paying high prices. And then we go over to the currency. Let's find that currency. It's the Spanish energy company, and it's been parked up into the 27s now for almost a full week now. Matter of fact, over a full week, 2 weeks now, since back to November 19th. You see the daily zigzagged around and then back into the buy 4 days ago, and hasn't really gone anywhere from it. You can see the weekly's been in a buy since October, all of October, all the way out to now. So the pressure on the energy sector really sticks out constantly. It does not let go. All right. That pretty much concludes. Oh, let's put that up on J4X at the end so you can see it, compare it. Bang, 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 bang. Right there. Look at that. 7 days pushing up there. That's pretty cool. So. From the energy sector, we might as well go over to the stock arena and see what's going on with the stock market. Let's put the intraday up. There it is there towards the highs of the day. As you can see on an intraday, this is up to where it was yesterday afternoon. Matter of fact, at lunchtime, U.S. up in the was that the 76 area, 74 area, 75 area. The high there yesterday was 78. Got up into the 78s, bounced around the 75s, and we are trying to get there now. It's at 74. We'll go to that is a 18,000 tick chart. Let's go to the shortest term one. That is a 2,000. So you see it trading in the 74s. And you can see we are just, did it even get into a sell there? I guess it did. Minus 10, minus 20, and minus 17. So it slid into a sell, 1 bar. And did it get in there too? Is that minus 05? Yeah, it's minus 05 and minus 33. So it went into the sell here, right there. Stayed in the sell, and now it's back into the buy on this one from the 73 area, and now it's trading in the 74. So it's not much action, but it's slow, steady burn. It doesn't let go. So between these two, the pressure is on the upside, and it's not letting go. And we'll see, what they're trying to tell us. I had a feeling after they took it up, they almost took it up to 4,600 on the S&P 500 yesterday, and then they sold it down. And I'm really thinking maybe they're going to go do that again, take it back to the 46. I think we always had a saying on the trading floors, and that was you got to take it up to take it down. And so when you have J.P. Morgan coming out and saying they think that we'll see a low of 4,200 next year in the first half, then you got to figure they're trying to take it up so they can take it down. Now, Dow Jones Industrial Average right now is up at 218, I think. I think that's where it's at. Let's go take a look at the daily charts in these things, and then we'll call it a day. So there's the S&P 500. You see it's still trying to climb up. It went into the buy. I think it went into the, where is it? Went into the buy yesterday? Yeah, it went into the buy yesterday. I think it went into the buy yesterday. Let's double check that. Let's just change the data feed, from a default. Let's try that again. To a default from 24 hours. Yeah, see, I thought they put it into the sell yesterday. That makes sense. And now it's trying to lift up. And that sell is right there. So it was one day in a sell yesterday. And now it's trying to lift up, but it's going to take a little work. You can see it's minus 1.83167 back and forth. But if they pick this thing up into the high 80s, it probably will get into the daily buy. You can see here the weekly buy is having no issue whatsoever. Now let's take a look at it over on J4X. Right there. See, it's in the daily buy there on a weekly. Weekly buy it is. The daily went into a sell there. We're not seeing the algorithms. There it is. And so right now it's at 50.87. The slow is at 56. It's still in that down mode. We got a little green trying to turn up. It's real close. Very, very close. It's trying to lift. And then let's put this in there on that. Let's put it up on the beta. There it is. And that's it. You can see how tight that's getting. And it's trying to get through the plus line as we speak. Now the daily seems to be working fine. It's the weekly that has me concerned here. All right. So, and the weeklies have been right. 16 out of 17. But that gold thing really shook me up. Now from there we go over to the NQs. Matter of fact, where are they at? There. Let's do this. The Dow. There's the Dow. And so the Dow is in a buy and it's not letting go for like weeks. And same thing on the weekly signal. It's been in a buy for a while. Now let's take a look at it over here on J4X. There it is right there. Same thing. Look at that. Baby's just climbing, 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 climbing. And then let's look at it over here. The grand lady of them all, of the stock indices, basically it just shows lots and lots of strength. Ours, all platforms here are pointing in the same direction. Lots of strength for over 4 weeks on dailies, no less. So they got to take them up to take them down. That's the name of the game. That's the way they play it. Now let's look at the Tech 100 and then we'll get out of here. And here is the Tech 100. Right there. The Tech 100. And let's just put the default in there. That straightens it out a little bit. There we are. Now let's go over to it and see what it did there. Yeah, it straightens it out just the same way it did the S&Ps. And so you can see here, it pushed into the sell yesterday. Right there. Matter of fact, last week it went into a sell too. And then went back into the buy. Let's grab one of these. Went into the buy right there. They popped it up and knocked it down. And now see, we're above right there. You can see it. The daily is pushing and there's no dot whatsoever. So it's already climbed into the buy. The weekly looks very firm also. So that is what it is. Now, I guess the bigger question out of all this is what kind of title should we use today? And yesterday we talked about how... I forget what it was, but because of the disruption of yesterday. But we know one thing is for sure, and that is that money is convinced that interest rates are coming down. And they're not letting go of that fact. And so it's bleeding into the stock market. It's bleeding into obviously the bond market is making it bleed out all over the place, and they're all paying attention to it. So that is really the challenge, and that is that as long as the money managers keep on believing that interest rates are going to come down, and I've seen where they're pricing a cut in May, April now. They're I don't know. It's so hard to believe, but it's an election year, so it makes it very, very hard to not do that. Yeah, exactly. So Dollar drop. Yeah, that's what it is. Title: Dollar drop rate hopes. That's what it comes down to. And today, stock indices have interest rate hope. I mean, that's really what it comes down to, because they're not letting go on it. So that's will be our title today. So, happy trails to you until we meet again, which will be tomorrow on Friday, TGIF. Happy trails to you, to our trading friends. Later, traders. Have a safe and smart trading day. Catch you tomorrow. Bye-bye.